Okay, so I mentioned this part 2 about the difference between cash value loans and bank loans. And I mentioned how my business partner and I leveraged a policy loan on just a typical business expense that we had and created roughly an 11% return for him. So let me detail that. We were moving into our first Class A building and we were using an executive suites. So we were up on the top floor. There's a variety of other businesses up there using the same front office staff and all that. We negotiated the lease. It was an 18-month lease. And when it came time to sign everything, my business partner said, how many months off would you give me if I paid the entire amount up front? Would you give me 3 months? Now, as the landlord, that executive suites management company didn't have any small businesses offering to pay their full lease up front. None. So they came back with, how about we give you 2 months? So you get 18 months worth of rent if you pay 16 months up front. We said, okay. So my business partner took a policy loan from his policy for that amount, paid our rent for the entire year and a half in the form of 16 rent payments. Now, our business didn't just get to live rent-free. Our business would have had the expense every single month for the next 18 months. We were paying rent. But instead of going to the leasing agency, it went back to him. Now, at the 16th month, he paid off his loan. There's a little bit of interest expense, but not very much. It's a simple interest loan. But at month 17 and 18, we didn't give our company a break. We could have used those 2 months to help capitalize an account for us and our next building we were going to rent. But instead, our company paid him. You see, that was a return for him. He put 16 months worth and got 18. So when you calculate that out, he got roughly an 11% return by having his money parked in a garage that he could deploy for an opportunity. Now, could we have done this if this was sitting in a bank account? If we had all that money in the bank account instead of the insurance, could we have done it? Sure, we could have depleted it and then we just could have slowly filled it back up. So did this make him a millionaire? No, but you do this over time to where you don't lose the opportunity to earn on your money. And does it make a difference? You bet your butt it does. So that is a practical example of how we used it in an everyday business type of decision to produce roughly an 11% return on my business partner's money. Yeah, I tell you what, those who have the gold make the rules, right? Cash is king. Sure is. You just got to be in a position to own and control it and be able to leverage it and create an arbitrage, an opportunity for you and all the opportunities that come about during your everyday life. Go to financialcaffeine.com. I've got an audiobook for you on this. I've got a video you can watch. Then when you're ready to meet with me, you can go to financialcaffeine.com/survey and get on my calendar. Know what you're loved, know what you're blessed. Have a great day.